Hey everybody, welcome to the Investing Education channel again. So today I want to talk a little about a concept called diversification. So it's not diversification instead of in terms of spreading out your stocks. It's the evil twin of it, you could say. So in particular, this is the term I'm referring to. So what is diversification? So basically, you can read about the definition here. So I think in a nutshell, really, it's about buying too many stocks, which really diminishes your overall return. I think if you really are a novice investor or you're not doing this full time, then you really should diversify in the good sense. But you should do that through the S&P 500 index or through some other index like the World Index or even the Nasdaq 100 index. That is really the diversification you need. But I mean, if you are an avid reader of stocks and you're putting in the required amount of time and reading into researching your stocks, then you should really be picking your best ideas. And this is a concept that people like Peter Lynch and even Warren Buffett have talked about. So Warren Buffett says your seventh stock is probably a mistake. What he's trying to say is your best six stocks are the best ideas you have, and you should invest more of your money into those best six stocks instead of trying to find more ideas, which will probably be not of as good a quality as your number one idea or your number two or your number three idea. So as you can see in my portfolio, I try not to do the diversification, which makes the returns lesser and diminish over time. If you look at my portfolio, really the top 10 stocks or the top 8 stocks are really the main stocks you want to focus on. So that's the important thing, really. You want to focus on your best ideas. There's a few stocks that are not in the top 10 or top 8 yet in my portfolio, but I would like to build them up. I'm just looking for a good opportunity, like for example Boeing. Well, I have bought a little of Boeing, you can see here, but the price has shot up again, and so I'm holding back. But I'd like to buy more of Boeing eventually. In terms of the portfolio, you can see also it has risen quite a bit over the last few days. The stock market has generally been going up. So coming back to diversification, so how do you pick your best ideas? So I think if you're the ultimate comparison is with the S&P 500. So you want to beat the returns of the S&P 500. That's why this channel is called is titled Beat the Market as well. So in terms of the S&P 500, it has 500 stocks. So basically what you can do is you can use a concept called via negativa, which basically talks about removing things that are not good for you. So that's what I try to do. So in terms of the 500 stocks on the S&P 500 index, I remove stocks that I don't understand. That removes a big chunk of stocks already. I remove stocks that I feel are very highly priced or have very high debt situations. Like Netflix, for example. So I remove that. I remove stocks that I don't feel have very strong moats or have a lot of competition. Auto stocks. They have just 10 car companies. I don't want to invest in something that has so much competition. And then I also set some barriers in terms of the market cap. We set a barrier at 2 billion or 5 billion or 10 billion and above only, because scale is also a type of moat. So eventually, you try to get a very concentrated portfolio. I aim to have a portfolio between 10 to 20 stocks. I think with this 10 to 20 stocks, whether the amount invested is 100,000 or 100 million, basically, it's just these 10 or 20 stocks that you really need to carry your portfolio forward and to have very good returns. I think if you look at some of the best investors as well, Warren Buffett, I mean, he talks about having a concentrated portfolio, and his portfolio is actually quite concentrated. I mean, if you look at Apple, that's one of his biggest stock positions, and then you have a few other very big stocks like Geico and Burlington and Precision Cast Parts, and they make up a very big chunk of his portfolio as well. And I've mentioned Terry Smith as well before, and he aims to have about 20 to 30 stocks. I think that too is a bit too much, because I think as a person, really, I mean, there's a limit to how much you can understand about the intricacies of different companies. So if I mean, you're definitely not going to understand 100 companies as well as you can understand 10 companies, right? So the logic is really, you don't want to stretch yourself out too thin. You want to focus on the stocks you really understand, you can research well, and you're very confident about. And the other point is, actually, there are not that many stocks that have very high quality moats, so that further narrows it down as well. So I think the key takeaway for today's video is really to invest in your best ideas, the best stocks, and I'm sure your returns will be very good. Thank you and have a good day.